Hey guys, it's Chris Wong. I'm filming this video as of March 3rd, 2025, and I'd like to talk about the several margin calls I experienced in the last week and the changes I made to my Questrade margin account and my Wealthsimple account. So as a disclaimer, I'm not a financial advisor. I'm just a guy interested in building a portfolio. So in the last week, I did experience about 4 margin calls. And I know some of you would say, using too much leverage, you got to cut down on using margin. But I did understand the risks of using margin, and I would say it's also more of a learning experience as well. So one thing I did learn during this week about margin calls is the bigger your account is, or the more leverage you're using, the bigger the margin call can be. So even if I did max out my margin with, like, say, $100, settling the margin call is a lot easier because the margin that they'll ask for is going to be smaller in dollar value. It'll still be the same percentage as like $1,000, $10,000. It's a lot easier to settle a margin call if your account value is $100 compared to like $10,000. So one of the things I did experience during these margin calls was that the deadline to settle the margin call isn't always going to be a day or two. One of my margin calls, I got an email and it says it was due the same day at 1 o'clock p.m. So I was only given about 4 hours notice in order to settle a call, or they would start selling shares. I did find that settling a margin call just by transferring money from your bank account, it's a lot easier than trying to figure out what to sell in order to clear the margin call. So if the margin call is around $100, most times it was easy for me to just transfer $100 just to sell a margin call. But the margin call became, like, say, $2,000. I know for most people it may be harder to settle because if you put everything into your margin account or everything invested, you may not have $1,800 until your next paycheck in order to sell a margin call. So one of the things to consider when settling margin calls is the margin requirement of the funds that you sell. So because everything I invest in is 30% margin requirement, with the few exception that I did try out investing in VOO, I even tried SPY and QQQ. And I did find that those 3 ETFs, SPY, QQQ, and VOO, they had 20% margin requirement on Questrade. The reason why I'm talking about margin requirement is even though the margin requirement is great for being able to invest more on margin, there was also the downside too of trying to clear a margin call, because with 30%, you're going to have to sell at least 3.33 times the amount just to sell a margin call. And even if it's 20%, you have to sell even more in order to sell the call. As majority of my investments are high yield dividends that pay weekly or monthly dividends, that means I lose more if I have to sell 20 or 30% when maxing out the margin, just trying to collect income to pay down the margin. So one of the biggest changes I did make was going from VOO to HYLD.U as one of my main anchors in my TFSA and Questrade. And my TFSA is my collateral to my margin account. So over a month ago, I decided to try having VOO as one of my main anchors for my TFSA because of the 20% margin requirement. But I found out during this margin call, I didn't like having growth ETFs, that I like only having monthly or weekly paying dividends in all my funds. So when I switched from VOO to HYLD.U, I went from a 20% margin requirement to 30% margin requirement. That meant even in my TFSA, I lost buying power in my TFSA as well. That meant in order to get my buying power back to maximize all my dollars in my TFSA, I had to sell some funds in my margin account in order to get my buying power back. And that meant selling some funds at a loss, which with the dividends and the market correcting itself or the market going back up, then I will eventually get the money back. You hear all this panic that goes on when the stock market goes down, and then people panic sell. So whether you use margin or you don't use margin, the one thing I always do is stay invested. So even if I did have to sell at a loss in order to sell a margin call, or have to sell at a loss just because I really need the cash, the important thing for me is stay invested so that I will try to get the money back by staying invested and the market actually goes back up. The way panic selling loses money is because buying high, giving it to fear of missing out, or buying high just because everyone's doing it, and then you're selling low because you're panic selling, but then because the market actually went back up and you're not holding on to the shares, so you actually permanently sold it at a loss because you didn't buy it back at a low price, or you didn't buy something else back at a low price and let it go up when the market goes up. I hope you guys liked the video. If you liked the video, please give me a thumbs up. Otherwise, please subscribe to my channel for future videos. Thank you guys for watching.